Hello, everyone, and welcome to a show, Trade Talk with Vishal Mehta. We've got Vishal on our channel, and we ensure that he's here on every expiry. The last Thursday, after you had handful of people making money, some of them losing money, we'll discuss with Vishal what goes behind the making of the money and the losing of the money. So, Vishal, welcome to a show. I'm just before we start the show. How was it for you? How was the expiry today?
No, so expiry has been good. So remember this. This is not just a weekly expiry for us. It is not even monthly expiry for us, but it is a quarterly expiry for us because we benchmark ourselves on quarter to quarter basis in terms of how our performance, and that is one of the things that I'm going to talk about today in today's presentation as well, when I'm going to talk about the psychology. So yeah, it was very important expiry, and luckily it was a very good expiry for us. So we're going to talk about run through the expiry and what went through the day and in the coming days.
Sure. So before I ask you about the psychology, I also want to learn as a trader what is the psychology of someone who's there, trading in and out every single day. Vishal, first tell us one important question. I'm sure all our viewers have it in their mind. Uh, Market kya bolta hai? How was it? How was the expiry for you?
So why expiry has been like आज there was a gap up. Obviously, that's what teaches you about systematic or psychology point of view. अगर आपने कल का Dow Jones देख लिया, if you would have seen yesterday's Dow Jones, and if you would have seen today's morning SGX, and to be honest, we were carrying short call positions. Okay, but guess what? We had few puts also short as per our system, and interestingly, we didn't do anything. We just followed through the system. And there was a minor loss into the overnight algos. But when it came to the intraday algo, we just nailed it. Like it was a gap up opening. And then after that, there was the prices started coming down and just went one way down. Even in last like 3 to 3:30, there was a big drop. We actually benefited from that also. So maybe in the next few of the expiry straight talk, we're going to talk about that strategy that we use between 3 to 3:30, which really helps us to make money in the market.
Sure. So let's hear it from all our viewers, guys. If you really want to learn this strategy, which Vishal uses to make money on expiry days between 3 to 3:30, put it out on the comment, and we'll ensure in the next trade talk, Vishal talks to us and explains to us how a systematic trader makes money in expiries. Vishal, first tell me what is your view on the markets. Let's talk about what happened in the previous in the month that just went, and what do you expect in the coming months?
Sure, sure, sure. So let me just share my screen. Let me know when you're able to see the screen. Can you see my screen?
Yes, I can.
Yes, you can see the Nifty chart, right?
Yeah.
Awesome. So let's understand. I usually say I don't predict the market. We tend to follow the market, but somewhere you have to have some levels or game of plan. Okay, how do you go about playing the market? And this is what I learned very nicely when I was reading a book called as "You Can Win" by Shiv Khera. So what did Shiv Khera did very nicely is gave an example that you need to have a view or a game plan of how the market works, and, or not how the market, how the life functions. So he said, okay, there are two teams who are very eager to play football or soccer if you want to call them, and both of the team charges to the ground to defend, kind of defeat each other, and all of a sudden you remove the goalpost from both the end. What will happen is nobody can keep a track of what will happen, and nobody knows who is winning and who is losing. Same thing when you are trying in the market as well. Try to avoid predicting the market, but at least have some game plan, or your goal post. If this happens, then this. If this happens, then this. So this is how I'm going to analyze the market. Now, if I'm looking at a Nifty chart, and in fact, so on a Friday also I was talking to someone, which was a very interesting place we were talking about, is when I'm seeing this moving averages, so Nifty at 16,800 has closed above, or sorry, closed below its all major moving averages. It has closed below 5-day moving average, which is in green color. It has closed below its red moving average, which is a 20-day, which is a monthly average. So why 5 days? It's a 5 days is a weekly, 20 days is a monthly. Then this is a blue one, which is a 50-day moving average. That's roughly around a quarter. And then there is a 200-day moving average. Now, when you have your prices, all of them crossing below all the major moving averages, you really want to be careful on the long side. And I was talking to someone and he said that, Vishal, my momentum stocks are not working. And I said, you know what? I think so. You're missing the major component of your analysis. That is the index itself. We are not an uncorrelated market. And in fact, we are very correlated market. If your index goes down, very few stocks that we are going to talk about will do at least well. I'm not talking about exceptionally well. So if what I can see on the Nifty chart, the prices has closed below the all the major moving averages, that is definitely a worry point sign. The first level of support that I can see is some residing somewhere around 16,400. If you can see over here, so if I'm going to put my horizontal line, which is somewhere around here, in this area, the 16,400 odd levels acted like a major support in the past. And guess what? What I'm looking at market is 16,400 to take a dip. And maybe looking after this, after it closed below all the major moving averages, I'm expecting that fall to come much faster than I was actually anticipating it. So that's one thing. But always remember, Nainesh, as a trader, and we're going to talk about psychology, think in terms of probability. Currently, the probability of market going down is very high, maybe 70-80% of the time. But there is always a probability that you will go wrong. And the market may reverse, make a bottom now, and then start going up. So always be ready to, in your psychology or in your mindset, be little conservative thinking. What if I go wrong? Where would I get out of my position if I'm building a short position, or if the market does sudden, kind of movement which invalidates my signal. So this is how I'm going to analyze my market, assuming the market as of now, I'm not going to be bullish right now. Maybe there will be a bounce back towards 17,300 odd levels because we have been in an oversold territory. But then I still would not, kind of put a lot of positive bets or maybe, big bets on the market. Maybe place small swings for few of the stocks that I'm going to talk about. But that's pretty much about it. Right now, my view is bearish, is 16,400. Maybe a bounce till 17,300, 400. That's okay. I'm going to let it pass by. So
Sure.
that's,
Vishal, I have a question here. Sorry, a discretionary trader that I am. This one question comes to me, and I'm sure it comes to a lot of our viewers as well. My question is, Vishal. Expiry candles. Like today, you're seeing an expiry candle. Expiry candles breaking, let's say, supports or breaking out of resistance zones, breaking moving averages. I've heard a lot of people say in the markets that you take it lightly, use the next candle to confirm whether that break was serious or not. What's your thought on that? I know you come from a systematic background, but what's your thought? Help us discretionary traders actually understand the importance of a expiry candle.
okay. So let me just ask you a very different question. In this past chart that you are seeing, can you make out which was the expiry candle? No, right?
No.
Because every candle is like a momentum of buying and selling. Yes, I understand what you're coming from, that there is going to be a big movement, but always remember that expiry is not only Nifty options or Nifty futures, it's stocks also. There are so many stocks fundamentally also playing out. So I have also heard many people that on expiry day there will be a lot of spikes and major resistance broken and then reverse back possible, but I'm not from that school of thought. I still believe if the prices was below 200-day moving average, it's a sell zone for me. But you know what, everybody has entitled to their views and I respect everyone's view. But I still believe that you have to view the candles as it is. because it's still buying and selling done. People also lost money and made money. So it's everything is clear or everything is genuine. It's nothing like on the expiry candle, the volume that is generated is fake, which is not the correct thing. So I give equal importance to the expiry candles as well as I would give it to any other day.
Sure. Okay.
Awesome. So let me just talk about Bank Nifty also. Say, what you have seen in Nifty, that there was a big, kind of a drop below 200-day moving average. But when it comes to the Bank Nifty, Bank Nifty is holding on to its foot. Obviously, it has crossed below its all major moving averages. But the final red, what you call it as the Lakshman Rekha, is still little down, which is somewhere around 36,700 odd levels, or maybe little less than that, 13,600 odd levels. So you can expect the prices to come at 36,600 and take a rally back from there. So that's, and if you will correlate with the market, okay, if you correlate with Nifty also, we are seeing a little bit of fall till 16,400, which also coincide with the somewhere level of Bank Nifty on that. So this is how I'm looking at the Indian market. Let me just take for a second the international market, okay, which is even more interesting. Okay, if I was looking at Dow Jones, and if I would have gone to its weekly or a monthly chart, okay, remember this was the pre-COVID level, Nainesh. This was the pre-COVID level. Market crashed, came back, made a resistance, fall down, tried to come up, again could not sustain, came down, then broken out. But after it became, and a classical technical analysis term says, right? Seller once broken tend to act as a buyer. The support becomes resistance, resistance becomes support. And if you look at this 200 weekly average for Dow Jones also, is somewhere around here. So now what we are saying is we are at a very, very, very crucial area. It's a make or break. If you ask me, the probability is on the downside, but I always be ready. If something goes wrong, I need to just be accept that I was wrong and move ahead. And if there was a bounce from 29,800 odd levels, we can see the price is touching on Dow Jones at around 31,700. So this is how I'm going to play out on the bearish side. Just get out of my long, very heavy long positions. Maybe let some chip out of the market. Keep them handy. So when the market falls at 16,400, I may get an opportunity to re-enter.
So interesting chart, I think, on the Dow. The fact that Vishal, we are seeing down near its 200-day really gives hope that it can move. But don't you think if Dow bounces from 200-day and the support which was previously the resistance, Indian markets also will follow suit? So just wanted to understand, what do you think is the intermarket thought between Dow and our markets?
So that's a point that we have been talking about in social media all the time. Are we decoupling or we are recoupling? Okay, if you ask me, there is no, like, this is my firm belief that global markets are all interlinked and money will find its way. Okay, one way or the other, and it will keep on flowing. But if you ask me honestly, the decoupling thing, I am not a firm believer of those cycles. I feel if Dow Jones bounce back, yes, there is a bounce on our card for us also. So that's why I'm saying that 200 week moving average in Dow Jones also is at a crucial level, which is also at a very important pre-COVID levels, acted as a resistance. But if we see this, okay, if we see a close below 28,920, I think so everything will be lost, and maybe we can see a fresh bout of selling. I really don't want to sound pessimistic, but it does definitely looks a very, very bad picture if we start closing below 28,900 in Dow Jones.
Yeah, so Vishal, I'd also want to ask you a question on the basis of the Nifty and the Bank Nifty charts. I mean, the way I look at it is Nifty, we've seen it break 200 DMA, which you showed us. Bank Nifty, however, has not yet broken it. So if I were to kind of look at reversals, if there were any, don't you think I would kind of chase Bank Nifty more than Nifty, because Nifty would kind of take the 200 DMA again as a resistance. Bank Nifty, the fact that it did not come till there proves that it has more strength, as compared to the Nifty. Would you think or suggest for a discretionary trader like me, should you find opportunities in banking stocks because comparatively they look better in terms of comparing it with Nifty stocks?
No, true. Nainesh, if you put it out very correctly in terms of like Bank Nifty is actually showing a strength, and if you want to really play out this game on the long side, although the probability is little skewed on the downside, but if you still want to put some chips on this, it would be banking. But you know what? I would rather looking at banking, I would suggest two more sectors that you really want to put your chips on, and that's what I was about to talk about. Is one sector that I'm looking right now is CNX Pharma. Okay, if I'm going to look at this CNX Pharma, look at this chart. It's like the entire market has been falling, and what is happening to the pharma? And it's nothing but a defensive play.
Yeah.
I'm not a rocket scientist, or I'm not going to talk something very very fancy stuff. It's age old conventional technical analysis. Whenever the market is into a free fall zone, the money will flow because there has to been SIP money coming in. There is an institutional money flowing in. They have to invest somewhere. The only place that they start investing is on the pharma side and on the FMCG side, and these are the two sectors are actually showing a lot of very lot of strength. If you look at pharma sector after being in the downtrend for a while, the pharma sector has started coming up now. It is now going to touch its 200-day moving average, which is again a very interesting juncture. And you can see the previous resistance are also coming in. But looking at the chart, I feel pharma is showing a lot of strength because if you see, it is above its 50-day moving average, it is above its 5-day moving average, it is above its 20-day moving average. The only hurdle that they are waiting to breach is 200-day moving average along with 13,000 levels on the pharma. So pharma is definitely where I'm going to put my bets on rather than banking. And a stock that if I want to put it out to play it out will be Cipla. Look at the stock, the complete, and it is something what we call as a relative strength, right? The market is in a downward frenzy, and here we come and look at pharma sector, and here we look at one of the leaders in the pharma. Cipla is actually making an all-time high, and people who knows me knows very well that I like to buy stocks which are hitting 52-week high and all-time high. And guess what? This is an all-time high for Cipla, which is completely unheard of. People are not paying attention to. Okay, so definitely a stock that I really want to keep on my radar and buy or accumulate if I really want to play out on the long side is Cipla on the pharma side. And another sector that we always talk about when the market is in a downward frenzy, where do the money flow? It flows into FMCG,
FMC.
and none other than a better leader right now in an FMCG sector is everyone's favorite ITC. Okay, although it has little bit of pressure now, so we're going to have to wait it out if the prices starts closing above its 5-day moving average, and that's where we will start getting into our position building again. But these are the two sectors and two stocks that I'm keeping a close eye on.
Sure. So I think the Cipla example that you gave, was really showing the strength that these stocks have doing. I mean, today if I go and see some pharma stocks, I've seen most of them close in the green, and that's like the first signal that when markets have started. I mean, 6 consecutive days of red close, but some of these stocks have shown real good strength. So good learning. Also, Vishal, let me tell you that through the 1% course that we did, and you've been one of our mentors through the course, we actually learned a setup which is to kind of encash off the all-time highs. And some of our participants identified Cipla today in the morning itself. So I think, amazing technique or good way of at least understanding where the money is going. Across the board, you might have selling, index-wise, you might have selling, but money is definitely chasing some pockets. And as a trader, you want to find where either money has been taken out or where money is chasing. So,
Yep.
I have a question on the FMCG front. If you go back to the chart, on the FMCG index that you are seeing, FMCG, I've been seeing it the way it is. it's not kind of come to the let's say the 20 DMA or the 200 DMA. In spite of the markets correcting the way they are, Nifty at 200 DMA. What's your take on this? The one thing that I understand is if Nifty breaks the 200 DMA, which it has done, and gives us some subsequent closes below that, there is a chance that most of the stocks that fall in Nifty will kind of give us correction. Now, should I look at it this way that these stocks, like especially this one, where I can see that even the 20 DMA or the 50 DMA is not touched, will they be kind of the stocks which will be sold out for weakness, or will they be the stocks that will catch the strength? Vishal, what's your thought on this?
Perfect, Nainesh. So this is how I analyze the market. See, when the Nifty breaks its 200-day moving average and manage to sustain below it, the best option for a trader is to just book out its chips or book out of the stocks. At least on the swing trading, I'm not a very good guy when it comes to fundamental long-term investing, but at least from a swing trading perspective. So first thing that you should be doing is get out of it. But then there are people who say, you know what, we don't want to take our chips out of the market. We want to, rotate our money from an aggressive to defensive and defensive to aggressive. So that's the second type of traders or second type of option that you have it, that you rotate your money to a defensive play. But always remember that when the market corrects, the FMCGs and pharmas will hold on for a while till there is a correction, because, and this is how the psychology, and that's what we're going to talk about today anyways, is how the money actually impacts your psychology. So most of the people who have parked their money, say some of them are very smart and moved their money to pharma and FMCG play, considering say IT or maybe banking stocks are getting butchered, but they still will have some kind of an exposure to those stocks. And when they have those exposure and when the market is crashing, they will get a margin calls. And when they have a margin call, they will go to the stocks which have not fallen and maybe take some profit on those stocks. And eventually, the stocks which were not related to the market also started acting along with the market, because not just because they are internal strength, but the inter-market play and where the money is flowing from. So that's how we analyze the market, that FMCGs and pharmas are the last one to hit. But once they get started hitting, they really get hit bad. So it's just you can say a cover under a very rainy day. But if it is a storm or if it is a tornado, even this will not sustain.
Yeah, I agree. I mean, we've seen in times, especially in the COVID fall, we had seen these stocks resisting and finally giving up, even as we got in deeper in the fall. So interesting learning, Vishal. I'm looking forward to more charts. Do you have more charts to show us, more views to
No, I
share?
think so. I think chart is one part of it, but I am more keen and excited to share you about how the psychology works behind what we do and what we see.
Sure. So we have a lot of viewers today who have joined us only to learn how a trader thinks. And I am excited to learn that from you, Vishal. Tell us what
Awesome.
should be the right psychology.
Sure. So let me just share my screen with you, and if you can just give me a go ahead that you're able to see the presentation, which says trading psychology.
Yes.
You can see it, Nainesh?
I can, Vishal.
Awesome. Awesome. And we can just get a comment from the audience that they are also able to see it.
So, guys, if you have a question for Vishal, save it up for the time that he's going to listen to you. Also, if you can see, yes, so we've got some of the comments and they can see what you're going to tell us. Before
Sure.
Vishal, before you start with the trading psychology, let me tell our audience today that Vishal has committed to come to our YouTube channel on every expiry. Okay, so be ready with your questions, be ready to learn something new. Be ready to learn what Vishal did in the previous month, what he's looking ahead. Very, very interesting conversations coming. Vishal, over to you.
Thank you, Nainesh. So this is what Let's, before we started out, just a few disclaimer. I'm not a SEBI registered investment advisor or financial advisor, and the most important thing that I'm going to give you an idea about what is psychology and everything, and always risk money that you can afford to lose. Although it's a part of a disclaimer, but I always believe that it's more of a psychology than anything else. So I'm going to keep it for a few seconds and then I'll move ahead. Okay, so let's understand. Does mind matter in making money? Nainesh, what do you think? Does mind really matters in making money?
Yeah, absolutely. Like according to me, it does.
And why do you think so?
I mean, one is so I'll tell you from a discretionary angle.
Sure,
Discretionary
sure.
angle. I think the mind plays a very important role because there is a lot of emotion, that comes in, and emotion triggers thought. Sometimes when you're sitting on a block of money, the question is, should you book it? Should you go against the rule and book it? Sometimes you're losing money, yet not at the stop loss. The mind gets triggered saying, let's remove it, save the little money that's left to the stop loss. So I agree. I mean, according to me, mind does matter in making money.
So you took an example in which I completely agree with you. Yes, it does matter in making money, but you used a word that I am going to talk about from a discretionary angle, right? But does it also matters when you are a systematic trader? Do you think, like, I know you are not a systematic trader, but just your view on that? Do you think that a systematic trader also need a mind to make money?
Yeah, I mean, you need a mind to make the system. So I'm guessing that's where the money lies.
Yeah, but that's one part of it. But I'll give you today's example only, that mind plays such an important role even for a systematic trader. Just to give you an example, who make your algo start and off is a human being. Remember that. Your system needs to be started. When I'm saying I'm an algorithmic trading, that means I'm running through a program, right? So I'm the one who is opening the system and I'm closing the system. Assuming I'm afraid that I am going to lose money today because Dow was up by 1% and today is going to be a big volatility. And I'm not going to trade today. And being a systematic trader, I made a discretionary decision just because I was afraid. Because I'm a human being at the end of the day, right? I would have missed out on a very good profitable day. So, and during the day itself, my M2M swings were moving in multiple of minus legs to positive legs. Okay. And people say, okay, you are always afraid that when it is making losses. But by 2:30, I had the biggest profit, one of the biggest profit that we have seen. And I still had to wait for a while till the market completes, and it plays with your psychology. So that's where the most important thing comes into the play. Okay, if somebody says the making money psychology is only for discretionary trader, is completely false. In fact, when you are a systematic trader, the psychology or the mind plays even more important role, because throughout the day you are free. Okay, and your mind cannot remain free. There is a famous saying. Okay, even if I'm thinking that I'm not thinking anything, I'm thinking that I'm not thinking anything. Right? I'm going to repeat it one more time so everybody understand this. Even if I'm thinking that I'm not thinking anything, I'm thinking that I'm not thinking anything. That means there is no vacuum in the mind. Your mind is constantly thinking. How do I twitch the system? How do I make more money? How do I make more money? And for a systematic trader, that is also even more dangerous sign to do. So yes, the mind does play a very, very important role in making money. So let me tell you a
Vishal,
interesting story about a guy. Yeah, go ahead.
Vishal, I think I have a good quote to that as well. It's like it's you would have heard it more. The quote goes like, you can actually remove a trader out of the market, but you cannot remove market out of a trader. So I
Very
think it's that way. I mean, even when we are working or when you're doing something, the market is always something that we're following, and I'm sure many of our viewers here also feel the same way. So, guys, if there is a comment or if there's something that you want to put out, please put out in the chat. Let's kind of support Vishal with this quote. Yes, Vishal, go
yes,
ahead.
that's awesome, really awesome. So do you know this guy, Nick Lisa? Have you heard of this
I've heard
guy,
of him. Yeah,
Nainesh?
I've heard of him. Yeah, I've
Okay,
heard of him,
interesting.
Vishal.
So let's take a view from the audience. How many of you have heard of this guy, and how many of you have not heard of this guy? I
Sure. So
can't see the
let's hear
comments
it.
on NH. You have to help me with that.
Okay, let's hear it from the audience. Nick Lesson, how many of you have heard of him? Some of you have been traders as well. Shashank, tell us if you've heard of Nick Lesson. And
If not, also do let me know.
okay, okay, we've got a few comments saying not heard.
Not heard or heard?
We've got
Okay.
a few comments. I think we should give a few seconds. No, not heard. Okay.
Interesting. So let me just start. So I got a mixed bag, like heard and not heard, right? So let me just tell you a story about this guy called Nick Leeson. He was actually a
There it is.
trader for a Barings Bank in England. So Barings Bank hired him as a trader. He was sent out. Um, he was sent out to uh, Asia Pacific, specifically in Singapore and market, to do the bank's trading book. Interestingly, he started out as a very good trader. Okay, he was a young trader at England's bank, Barings Bank, in '99, and he was a legendary. Why would I say legendary? Because the year he was posted into Singapore, he made $10 million. And by the way, they were all unauthorized trades. They were not authorized trades, but he traded and he made a $10 billion. And it was actually a 10% of Barings Bank, annual 10% of its revenue for that particular year. So that guy made 10 million, which was 10% of the Barings Bank revenue. So the banks was very happy. They started giving him more money to trade. And when you start trading more money, the most important element in your trading psychology comes into the play. And when you trade, you cannot be always be right, and you will may go wrong. Okay, and he actually went wrong. He actually traded some contracts. We are going to talk about them in the due course. He actually created certain positions which was not authorized in the first place, and then he executed them. And not on top of that, he actually hidden the tickets. He had hidden the tickets of the transaction. And it was just like, it's like a small kid when you give a paper and your marks come in, and you don't want to show it to your parents, you just hid it into your bag. That's what kind of stuff he did. And he did some 1.3 money, and he actually lost 1.3 billion dollars for the bank's money. And at the end of the day, bank filed for a bankruptcy. Now this is a story of a classical how psychology plays an important role in a trader's life. So what he did, I'll tell you one interesting, and that's where it started from. So when he went in, he started trading and he started making money with all the right stuff. But then one point of time he started betting on Nikkei, which was in Japanese index, and he started betting heavily. When it was falling down, he kept on buying it, buying it, buying it, and he always used to sell it on the higher rise. But once he started losing money, okay, he was afraid, because up till now he was making money, and he thought to himself that I cannot be wrong. He was not able to accept the losses, that he can be also wrong. And fear of accepting his losses, he actually hidden its order. That's what I told you, right? जो भी bad trades say, he would not report them. And funny part was, bank, from a risk management perspective, he was the trader and he was also clearing his trade. That means he was the maker and he was the checker. You can't give a lion, what do you say, to safeguard the ships, right? In this scenario, a lion was kept as a guard for the ships, or what you call as, like, the cows of the ships or anyone. The lion was there at the gate, patrolling them, which is not the correct thing. You need someone from a risk management to validate. But in this case, he was the trader and he was the checker as well. Another interesting thing is, he wanted to recover his losses. So what he did was, up till now he was buying futures of Nikkei. and thinking that the market will go up. But then at one point of time, the losses were so heavy. He said the market will not go anywhere now. So he started creating straddles and strangle positions on the Nikkei. And they were a very, very high probability trades. They would have worked out for him beautifully had not there been an earthquake in Japan. And there was an earthquake in that period where he created his position, and the Nikkei dropped even further in a big volatility way. And at that point of time, the losses were so big that they had to send out people from London for the margin call, and then the story goes on. It's a classic example of how a brilliant trader who made $10 million, by the way, okay, it was all legit trades, but when his psychology went out of place, what can go wrong? So this is very important for us. So what is the lesson that we have learned from the Lison story? Be patient and don't overtrade. Don't get excited about the M2Ms. It's so simple to get carried away with the M2M screenshots. I'm not saying they are good or bad. When I started out, they inspired me. But in my journey, I realized that inspiration somewhere in the journey became desperation. I thought if somebody can make money, so can I make money too. But after a point of time, I kept on doing it, kept on doing it. And at that point of time, what I've realized is it started interfering with my system. I started taking reckless trades. And that was the precise reason that I take inspiration, but I don't make them as my desperation. So be patient and don't overtrade. And that's what I can tell you from my experience. Learn to accept losses. Okay, and Nainesh, I do this exercise with everyone everywhere I go, and I will ask our audience to do it also today, because this is the most most important part of trading journey. Okay, can everybody agree that we are here? Everyone of us are here to make profits. Yes or no, Nainesh? Yes, we are
Yes,
all
yes,
here
of
to make
course.
money
Yes.
and profits.
Yes.
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 Nobody is here to make losses. Okay, let's hear it from the crowd as well on the chat. We are all here to make money, right? We are all here to make profits. Are we getting
Yeah, I'm sure we'll start getting yes. Yes, we'll start
Yes,
getting
yes,
yes.
yes, yes, yes. We are all here to make profits, right? I want you to do a small exercise that will completely the way you look at the market. Okay, and Nanish, you have to also do it. Okay,
Done?
so done. Okay, so what you have to do is just get relaxed. Now you are relaxed. Breathe in. Breathe in. Take. Breathe in. Breathe in more. 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 Breathe out. Breathe out. Breathe out. Now take few breaths. Okay. Breathe in. Breathe out. Now what you have just learned is the most important lesson in your trading journey. You have to breathe out to breathe in again. You have to learn to accept losses to make profits. You cannot always have profits, and that's the problem for a human psychology. We have been trained to be right all the time, and I keep on telling all the time that if your child or if your neighbor's child neighbor child को तो आप बात नहीं करोगे, but if your child gets 9 mark out of 10 mark, what is your first question to that child?
Where did the one go?
Where did the 1 mark go? That poor kid worked so hard, got you 9 marks. But what is your first question? Why did you become wrong? That means you are trying to inculcate habit of not getting wrong in their life. You have to be right to be successful. And that inculcation comes into your trading as well. And when you are in trading, if you have a loss, you say, you know what? How can I have a loss? Let me just keep it for a few more days, and when the prices will go up, I will sell it back. or I will average it down, or I will do something just to make sure that I don't have a loss. That's why the most important thing is learn to accept loss. Don't get attached to your trades. That's what we call them. Date your stocks, not marry them. Okay? If you're a trader, I'm not talking about fundamental investor. Even for investor, somewhere you have to date them, you don't have to marry them. Because the minute you marry them, there is a problem. And never risk too much on one trade. That's what Nick listened did. He did a betted big time on Nikkei index. And that went against him. So if I wanted to summarize this statement, it's very simple. Keep emotions out of your trade. I know it is easier said than done. We all go through that emotions, ups and downs. Even today, even if I am a systematic trader, I go through emotions. But over a period of time, the intensity of those emotions will start going down. Like you will not feel very happy or you will not feel very sad about the returns or the profits that you are generating. So, yeah, Vishal was very good. You have to keep your emotions out of your trade, but how do we do it? Okay, and the idea is through trading psychology. And I will talk about what is the trading psychology and the way the professionals think and act. So, what is the trading psychology? It's nothing but an emotional elements of traders, the greed and the fear. These are the two most important factor that drives the human behavior when it comes to trading: greed and fear. And as a trader, you need to control that trading behavior, and that's where the success would come to you. Traders familiar with trading psychology will generally not act out of biases, and there are n number of biases, other emotion resulting in better chance of earning profit during a trade. I'm not going to talk about the textbook example or a textbook definition, but I'm going to show you what I do and what helped me as a trader to become a better trader. So, why a trading psychology is so important? It helps us to trade mindfully without emotional reaction to gains and losses, and we keep moving forward like a successful trader. And I'm again repeating, maybe I'm repeating so many times that it is easier said than done. In a PPT, it can be easily written that without emotional reaction to gains and losses. But we are a human being. We will get reacted to the gains and losses. But the idea is your intensity of your reactions will keep on going down and down and down and down over a period of time. There was a time I was used to be very happy or said even with 10,000 and 20,000 rupees profit and loss. Now, even if we are at a very sizable number, we do not get bogged down or we do not get very excited or we do not get a very emotional about those numbers because we have kind of made ourselves to think in terms of percentage, that if I'm losing a certain amount corpus, what is it in terms of percentage? If I'm making certain amount, okay, what is it that I'm making in terms of percentage? And if you keep on trading your mind again and again and again in things of terms of percentage, your reaction to gains and losses will slowly and steadily start coming down. Okay, so what are the emotions faced by the traders? Fear, hope, ego, fear of missing out, regret, greed to make money. Now, if you really wanted to change that out, how does it Nick lesson went into this? All the fears, all the emotions. He was fearful that people will figure out that he was a losing trader. And what did he do? He actually started hiding the tickets that he was trading for the loss making one. Hope. He actually created a straddle position. Okay. He created a straddle position in the hope of recovering whatever the losses were happening in the Nikkei long future position would get compensated with a short straddle position that he was creating. Ego, obviously, because when he had such a big bonuses, he went out and partied like anything, and he talked to everyone that how good he is a trader. Greed to make money is always there, and I am not against it, but greed to make money has to have a quantification. Okay, as I forgot the name in the movie Wall Street. I don't know whether Gordon Gecko.
Got it.
Okay, he used a very very interesting term. Greed, for lack of a better word, is good. Greed cut through the essence of life and gives you the meaning. So greed is good, but it has to be controlled in a quantified manner. And once that is done, you will be a better trader. But in this scenario of Nick Lesson, it was not the case. Regret. Okay. And regret is basically when he went into a trade, he had difficult time with his wife, and he went on to write a book as well, and he's now consult people that what he did was wrong. And fear of missing out, obviously we all know that we will create a lot of trades which just are not part of our system because our neighbor is also making them.
So, Vishal, before we go to the next slide, I actually have a question for you. And this
Sure.
comes from the discretionary background that I come from. Very, very important thought or an answer that I think you would help someone find. One is, what you mentioned perfectly. Like, you should be very mindful about the percent capital you're losing in every trade. Not look at absolute numbers, because absolute numbers for you and for someone else will be very, very different. My question here would be, Vishal, how does a trader handle back to back losses? There are times where we try and dabble with positions, trying to kind of at least get there in the month. You have certain months like September, you have months where volatility is high. May, another month where volatility is high. How does a trader normally handle back to back losses? Like, what should kind of be the way to come back to the markets as strong as with that much conviction to do like the fifth or the sixth trade?
Sure. So, Nanesh, I think so. In our coming up slide, I'm going to answer that exact precise question that you asked. And we have, like you, we have also gone through many, many drawdowns. But this one particular slide that I'm going to show you will really help you to, come back to the market and trade one more time. And I'll give you with my live example as well and how I kind of handled that at that point of time. Okay.
Sure.
So,
Yeah.
there are three pillars of trading psychology as per me. There are many more biases and all that stuff, but this is the three core pillar on which that my trading psychology resides. Discipline, how do I scale up? And there is a concept called as law of large numbers that I believe in. Okay? These are the three major pillar on which my trading psychology lies. Let's talk about the first major one, the discipline. Discipline is essential, not even essential, is the necessity to be a profitable trader in the market. Being disciplined in trading will help you to become a successful, consistent trader in the market. So, वो एक famous saying है ना, perfect practice makes a man perfect. So it's just not practice. A perfect practice makes a man perfect. So that means you have to believe, or you have to backtest your system. Even if you're a discretionary trader, that does not mean that you cannot go into a bar replay and take those trades in your mind, or maybe put down, and that would give you that if this happens I would have taken my trade, and you make a formulation of the rules. Okay, and when you make a
Yeah.
formulation of the rules, you know that next time this kind of rules happens, I want to take a trade or not trade. So that discipline comes into the picture. So that's the most important part. Most of the trader lose their discipline when they start to scale up, because when you want to scale up, nobody is going to trade one lot. किसी का घर एक लॉट से नहीं चलता, बहुत कम लोगों का चलेगा, आई एम अज्यूमिंग. ओके, you really wanted to look at the Twitter traders and get very encouraged. And I again tell you that I get inspired by them, but the minute it started becoming a problem for me, I make it a point not to look at it. So how did I got a skill up? And what happens is, when you start scaling up, when you start scaling up, your discipline goes for a toss, because you start thinking in terms of absolute numbers of your PNL. जहाँ पे आप 1 लाख रुपया, when you are making 1 lakh rupee up and down, you are comfortable. But when you scaled up and all of a sudden you are making 10 lakh rupees up and down, your psychology will get a backseat. Your discipline will go for a toss. Your system, you will jump the system. So this is another pillar on which a trading psychology depends. And that's where I take a story of a very good very good article or a blog written by a good friend of mine, Kiruba Karan. And he talked about a story of Milo, and that became a cornerstone for me. Now this is how I scale up. So there is this guy called Milo, and they have this competition in Athens or in ancient Greek, where they have to lift the complete bull. They have to lift the complete bull. So
Yeah.
everybody started lifting the full-fledged, like, heavy bull. But then there is this guy called Milo, who is similar to me, like a thin little guy. He said, I cannot and never be able to lift whatever 1,000 pounds buffalo or a bull, but I can lift a calf which I can easily carry. So what he did was, he picked up the calf and walked around the city every single day. Not only that, if his mother would send out him to buy something, he would put the calf on his shoulder and walk. That means in this journey, he was getting accustomed to that calf. But then calf is not remaining going to remain calf forever. The calf started getting bigger. But at the same time, the strength of Milo also started gaining, because it was persistence that was helping Milo. That was the persistence of carrying the calf every day, helping Milo to gain its strength. And then there was a time when that small little calf became like a full fledged bull. But for Milo, it was never a full fledged bull, because he carried him as a calf, right? So at that point of time, he became so confident of lifting the bull, and he won many competitions. Now, how does it relate to trading and scaling up? It relates perfectly beautifully in terms of our story, because a lot of us are start with one lot. And if there is a book which is called as a one lot trader in the series of Market Wizard, so there is a guy called Tony Saliba. He traded one lot for the entire 1 year, and I get an opportunity to meet him also when I was in India and when I went to New York. And I asked him, like, you are managing billions and billions of dollars, and why the chapter in the book and you traded one lot for the 1 year? And then he interestingly told me that, Vishal, I just wanted to be comfortable with my system. I just wanted to be understand the nuances of my system. I just wanted to be comfortable with the M2M swings that I'm seeing, and wanted to be comfortable trader with it. And that's why he was called as one lot trader. Mind you, he's managing billions and billions of dollars right now. So scaling up becomes a very, very important issue in your psychology. And what we do is, we have a certain number in our mind in terms of our corpus. We see the M2M fluctuation. We get there, we get comfortable with those numbers. Okay. And then we move to the next level. Although our mind is constantly thinking in terms of percentage, but again, I told you, we are human being, like it or not, emotions will creep in, and that is where we trying to, kind of get adjusted. So if you go to Himalayas on trekking, you directly don't go to Mount Everest. What you do, there are bases. You go to those bases, get comfortable with the wind condition and the oxygen level, stay there for a day or two, and then move to another higher base where the oxygen level drops even further. Same thing happens in your trading career as well. And the last one, and this is the one that completely changed me as a trader. This was taught to me by a trader called Madan Kumar, based out of Chennai. And it was a very, very interesting thing that he told me. So he was running this trading strategy where he was buying options and everything. And then on his presentation day, he showed me his PNL for daily PNL. Okay, so likewise, I had plotted my daily PNL. So if you see over here daily or a weekly, you can see in this. Can you see this? It's all red,
Yeah.
red, 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 red. Now these are all red weeks. That means I started this system. I had a 56-point loss. This is one of the system that I traded. Okay. Next week it had a 36-point loss. Next week it had a 53-point loss. Most of the trader will stop trading the system after through 3 consecutive losing weeks. Look at this: 95 point negative, 1 point negative, 62 points negative. Most of the trader will lose trading in this juncture. Look at the 2020. We had one, two, back to back two losses, three, four, five, six, seven, eight. And even in, on a 23rd and 24th week of 2020, we had a big losses. Most of the trader would quit the trading system, even discretionary ones. But when you move them to quarterly, can you see, even if I had one, two, three, four, five, six, or a five bad weeks, I was only down in a quarter. Okay, only one quarter. And when you see a sea of red on a weekly chart, I had only one, two, and three red quarterly numbers. And then when we ran our number, what you were seeing over here, all red, 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 actually in a monthly basis was actually positive. And the one which had very, very large negatives on a monthly basis only had a negative 1 month. And when we went to a yearly number, guess what? Okay, yes, I think so. This got changed. This is the upper one is monthly. This is my bad. This one is monthly and this one is quarterly. So we had only one quarter loss, and then this was yearly, where we did not had a loss. Now this is the problem with a lot of problems that you mentioned, Nainesh.
Yeah.
That when I make a consistent loss, how do I come back and trade again? In my mind, I keep on thinking to myself, I have done these strategies n number of times. I have traded these strategies n number of times. I have backtested this strategy n number of times. And it has always come back up and made a new equity high. See, the problem with you will be, and everyone, is the first two drawdowns in a strategy. Okay? When you
Yes.
have a first drawdown, most of the people, the amateur ones, will jump to new system or a new guru or a new Twitter trader. Okay? Maybe if you recovered that, maybe he recovered that. The second drawdown, the second series of losses, 80 to 85% of the trader will stop trading that system. Okay? And
Right.
only few who believed in the law of large number and looking at the numbers on a quarterly basis will come back and trade the system again. And those are the traders who are consistently being profitable. And this is where I really wanted to put an emphasis on that you, as a trader, being a discretionary or a systematic, think in terms of law of large numbers. Okay, never measure yourself with your daily performance, never measure your performance with weekly, not even monthly. You measure your performance only with quarterly and above. And that's what I believe in. You may want to do it differently, but this has helped me to keep my psychology in check, helped me to scale up big time, and play the big game. So with this, make these three pillars too strong so your trading empire lasts long, right? Discipline, scale up, and law of large number. So with this, I just open up. Thank you for Fisdom for giving me an opportunity, and the audience for viewing this presentation. And I hope I was able to add a lot of values to what you guys have been doing. So let
Sure.
me
So
just.
Vishal, this was very very valuable, and I think I also got my answer. That I was looking out for. I think the larger picture gives you a better understanding and gives you the motivation to come to the markets. Vishal, we had Ashit Patel on our YouTube channel as well. We did some giveaways. I'd like to kind of announce that out in today's
Sure, sure.
chat. We had three winners who came out on our previous show, and we are going to give them a giveaway. So, Path Gokal Gandhi, he wins a free entry to our 1% Academy technical analysis course, and obviously get a chance to learn from mentors like Vishal. We had Guru Ram Sai Preetham who won giveaway from us, so he'll soon get a book to learn about insights on psychology of money. And we had Praveen Gopinath also in for a gift from us. So these were the giveaways, the winners. Congratulations for all of you guys. Vishal, thank you so much as always. The session has been amazing. I had a lot to learn. I'm sure the audience did as well. I'll open up a quick 2 minutes. I'll open up questions from the crowd. Any of our viewers want to ask Vishal a question? 2 minutes, and before we close up, I'll be happy to take it up with Vishal. Also, one more shout out before the questions come in, guys. If you have anything interesting that you want to learn from Vishal, I want to definitely learn a few strategies that he's been talking about. So, Vishal, the strategy that you spoke about today, I am going to get you to do it on our show the next time around. If you guys want to learn something interesting, please put it in the comments, and we'll ensure Vishal gives us time and he comes to our show and talks to us about trading, psychology, systems, whatever it is that helps us become better traders and make money in the next expiry. So, any questions, we'll be happy to take them. Vishal, also, while this goes on, just one question, one last question. The one thing is scaling up. You spoke about scaling up, and I think we had a question from the crowd as well. A very important question is, what should be the right time for someone to scale up? That's a very important question. I think you'll be able to help us.
So I think so. My answer will not be liked by many, and maybe even you, because there is no right answer. See, every person has his own level of comfort. Okay, if I really wanted to put a mathematical formula, I would say, okay, once you reach, there is this method that what is your maximum drawdown. Say if I have seen say 5% or a 10% drawdown, and you double it up. So basically, whenever you are, say, assuming you had a historical drawdown of 5% and you made 10% now, okay, in your profit. Now, maybe you have made two times of your historical drawdown, so it's time to scale up now.
Okay.
Okay. Now, even after 10, you put 10% and now you have a drawdown of again, you think 5%, but you have a 20% profit now. So you again scale up. That's a mathematical answer. But again, when practically, it completely will depend on your psychology and a comfort level where everybody will be broken at a level where they will not be able to sustain. So they have to take one step back and come to their comfort zone for a while and then again scale up back. So usually in a scaling up journey, people do tend to scale up aggressively, but then they started realizing I'm not comfortable with that number. So you have to again scale back. And I know it is very difficult. It is difficult for me as well. So I can imagine it will be very difficult for the people who have been doing it for the first time. But that's the only way to do it.
Sure, I think that's like the answer, and that's the best way to do it. I mean, your numbers will itself tell you or give you the confidence to kind of scale up. So yeah, I mean, thank you, Vishal. I love the way you put out stories to explain to us. It's actually very simple to understand and relate to trading. So guys, if you want to hear more concepts in terms of stories from Vishal, please put it on the comments, subscribe to our channel. You will find Vishal here very often talking to us, sharing knowledge, telling us how to become better traders. We've got a question in the crowd: how to start systematic trading. So I would give one answer to that: 1% Academy by Fisdom. We are actually launching an education initiative. We have mentors like Vishal, Jyoti Budia, and the others who come and talk to you and help you get trained. We will surely set up a course on systematic trading. So follow us for that. And yeah, I mean, thank you so much, Vishal. I had a
Thank you.
wonderful time as always. A great expiry in terms of money as well as insights. Hoping to kind of take
Well,
knowledge from this.
Nainesh, can I stop? Sorry, there is a question by Shashank that I really want to take it because he had a
Sure.
choice and he choose to listen to
See us
us. So
live.
let
Yeah.
me answer that one. That's credit to you, Shashank. Thanks for that. So share a story when your psychology got disturbed. So it was November 2020 and December 2020. Okay, these were the 2 months, and I was running a strategy which was like intraday short only strategy along with a volatility breakout in the Bank Nifty future. And market had 13 consecutive up days. Okay, it was just butchering me left, right, and center. The first thing that I did was scale down. So I was running a decent, corpus, and I immediately, the minute we hit 7-8%, I was not able to take that psychologically. I immediately scaled down. That was the first thing that I did. Second thing I did, that I realized that strategies were making money. I was very nice, but when the volatility kicks in, it was not for me. So I started introducing and working on other strategies, which were more linear in their payoff. So that really helped me to recover back my losses of 8%. And if I remember correctly, by Feb 14th or 15th, I actually hit a new equity high as well. Another one was 25th of June, where I had the biggest loss in terms of value, not in percentage, in a 1 day. So the number was such a massive number that I could not comprehend that I have just lost such a large amount. And I read this book by Jack Schwager called as Unknown Market Wizard. And then at that point of time, okay, in that point of time, he interviewed one trader and he asked him like, "What do you do when you are in a drawdown?" And he said, "I go and out party." And I think like, who the hell would go out and party when they are in a biggest loss or a drawdown? And he put out a very interesting stuff that I'm a systematic trader, or even he was like a screen reader actually. But if I go out and spend money the way I was doing before, okay, it will not disturb me and I can still manage my lifestyle the way I was doing it before this losing trade. And it will not have much of an impact on me on the next day. And I'll be able to come back next day and trade the same strategies with the same rules. And that's what I did. I just went out with my family, had a nice dinner. Obviously, I keep on having it, but that was more of unplanned dinner. Say, hey guys, let's go out for a dinner because I just want to be out of the market and not think about the market for a while. Because if I was staying at home, that number would keep on haunting on to me. And like it or not, after 1.5 months, I had the biggest profitable day as well. And I had put it out over there as well. I don't put the screenshots, I don't put the numbers and everything because I believe that it can be a detrimental for a lot many people, like it happened to me also. So this is how I um, keep on doing it.
Thank you, Vishal. So, Shashank, I think that answers your question. And also the question that you asked before. This is actually the secret of Vishal's smile. So, Vishal, we've got it. The secret of your smile. So, be it a
Yes,
loss or be it a new high profit,
always
it's the
smiling.
smile that keeps you going. Yes. So excellent. On that note, thank you so much, Vishal. Again, thanks a lot for being on our platform. Looking forward to talk to you on the next expiry. again with the same insights, again with questions to ask you and a new learning. So thank you so much, guys. Stay tuned. Vishal is going to be on the Fisdom channel 27th October, the next expiry. We're going to do trade talk with Vishal. Put out your questions, comment on what you want to hear from him. New learning, new month, new expiry, lots more money.
Definitely, your 1% Academy initiative is very good, and I think I highly encourage people to look forward to it.
So thank you, Vishal. We're looking forward to learning a lot of more technical analysis from you as well. So guys, 1% Academy by Fisdom is launching a course on 8th of October. If you want to learn from mentors like Vishal, please come join the course. And it is a good learning for someone who wants to just start off their journey as a trader. So thank you, Vishal, for being on our show. It was amazing as always. Looking forward. Thank you for all of you who stayed back to listen to this. We'll shortly answer questions that are pending. Put them on the comments and we'll go out and answer them. Thank you and see you again very, very
Bye-bye.
soon.
Bye.
Bye.